financial advisors, planning for life. Wealthway Financial Advisors, planning for life.
And good evening, Hampton Roads. Welcome to another edition of Dollars and Common Sense, your local source for objective, unbiased financial advice. I'm your host, Certified Financial Planner Kevin Zivna, coming to you live like we do every second and fourth Tuesday of the month to dialogue with you, take your calls if you have a question or comment relating to your own personal financial situation or anything we're talking about tonight. Jump on the studio line, give me a call, 627-7979. All we need is your first name, city you're calling from, and no matter what I'm talking about, if it's important to you, then it's important to me. We'll get you right on air. 627-7979. Wealthway Financial Advisors is the proud sponsor of Dollars and Common Sense. We are an independent registered investment advisor, which means we're legally held to a fiduciary standard to put our clients' interest ahead of our own in any business dealing or recommendation that we make, and that's the way it should be when you work with a financial advisor. As the premier financial planning firm in Hampton Roads, we integrate expert investment management with customized ongoing financial planning advice to help our clients answer life's big financial questions and enhance their quality of life. So by design, we can't work with everyone. We work with a relatively small group of high net worth individuals, but that's one of the reasons we feel so strongly about coming here every second and fourth Tuesday at 6 p.m. And that's to reach out and help as many people in the Hampton Roads listening area that we can achieve your measure of financial success, because it is a core belief at Wealthway Advisors that the overwhelming majority of people in this country have the opportunity for financial security if they choose it. And it is a choice because it takes some time, it takes some effort, and it takes some knowledge. We are here to help. You got to take that first step, though. Pick up the phone, give me a call, 627-7979, whether you want to talk about anything having to do with the investment markets, the economy, insurance products like life insurance, health insurance, property casualty, taxes, tax planning, tax reduction strategies, retirement planning, retirement plans, 401ks, 403bs, TSPs, IRAs, Roth IRAs, mortgage options, Social Security claiming strategies, or estate planning, wills and trusts. All that and more falls under the umbrella of personal finance, and we are here to discuss tonight. But before we jump into our topic tonight, I've got a couple of shout outs that I want to give to a couple of our employees at Wealthway. Today was a great day on Team Wealthway. We got a lot of good news from two of our employees. So one of them, a financial advisor and certified financial planner, Khalil Smith, who's been with us for almost 3 years now. He was accepted to a Master's of Financial Planning program at Kansas State University. So he will be enrolling in a Master's of Financial Planning program sometime later this year. Just got acknowledgement that he got accepted. He is a graduate of Virginia Tech and the Financial Planning program at Virginia Tech for his undergrad. Both Virginia Tech, Kansas State University, two of the more renowned financial planning programs, undergraduate and graduate programs in the United States, along with maybe Texas Tech and Utah State, for those of you who are into that sort of thing. But Khalil is very passionate about the financial planning discipline. He's going to make it his life work. He is already a certified financial planner and going on to get his master's in financial planning. I'm incredibly proud of him for going after that goal and taking the next step and getting accepted to the program. And then secondly, our associate financial advisor, Cody Hawkins, who has been with us about a year and a half, he passed his certified financial planner exam today and just got word of that. So associate financial advisor Cody Hawkins will be dropping the associate moniker here pretty soon once all the ink is dry and the formalities are are finished on officially passing the certified financial planner exam and then receiving the marks. There's an experience component that goes along with receiving the CFP marks as well. We got to check a couple more boxes, but he's well on his way.
Congratulations. That's exciting news, Kevin.
Yeah, that's it's a big day for Team Wealthway. CFP, we talk intently about the financial planning process, financial planning discipline. It's the most important service that we think everyone needs, but very few people realize they need. But we're all in on financial planning as our primary value add as a financial services firm.
Well, Kevin, what does that mean? If you'll just take a second, a CFP, people go, well, what does the numbers, the letters mean, rather?
Certified Financial Planner Designation, CFP for short. The pass rate for the exam is relatively low. Only about 60% of people who sit for the exam pass it, and only about 20% of the people in the United States who call themselves a financial advisor hold the Certified Financial Planner designation. So only about 20% of financial advisors are certified financial planners. It's the gold standard in the industry. It's a mark of excellence. We now we'll have 3 on staff at Wealthway, and also on the lookout for one more, and maybe in the next couple of months I'll have another announcement to make there. But very proud of the guys for taking the next evolution in the financial planning discipline. It shows our commitment and their commitment to the profession and to our clients and the type of quality we try to deliver for them. So just want to throw a shout out to both of our employees there at Wealthway. Now tonight we are going to talk about estate planning, tips, tools, and techniques around the estate planning process. And first off, let's dive into why estate planning matters anyway. Because I can tell you from professional experience that it's usually the last thing that clients get around to doing. But proper estate planning can financially protect your loved ones, minimize taxes, provide peace of mind, and ultimately allow you to do good in the world through your financial arrangements, if that's important to you. Estate planning is an important component of a comprehensive financial plan. So all of the clients who work with us, we do advise on estate planning matters at a high level, but we do not do estate planning. We do not draft estate planning documents. That is done by an attorney who is legally authorized to develop those documents. But estate planning is an important part of a comprehensive financial plan, and every agenda we have with our clients usually has a gentle reminder that they need to get a professionally done estate plan, or we are fine-tuning the estate plan that they have already had drafted. So we always have it on our radar. It's something we discuss with our clients all the time, and because it is an important component. And like I said, it's usually one of the last things that our clients get around to doing, and we have referral relationships with attorneys here in the local marketplace. So for clients who, if they have their own attorney, then great, go ahead, use him or her. But if you don't, then we have referral relationships that we can direct our clients to attorneys who we know do good work for reasonable prices. But essentially, estate planning is not something you do for yourself. It's something that you do for your loved ones and your heirs. And because there isn't a lot of internal motivation to get estate planning done, because what's in it for me? What is going to be some time and expense and some heavy thinking, easy to delay for another day. But I can attest to the fact that we often sit with the heirs of clients who pass away, or our clients themselves are heirs to their elderly parents who have passed on. And for those people who have done their estate planning, it is a huge relief to the remaining family members when there is a good comprehensive estate plan in place. And Damien, we were talking before the show, you have an example in your own family, right?
Yeah. I was explaining just a number of years ago, because I remember hearing you talk about it over the years and finally seeing that actually manifest into my life, at least. My grandfather passed a number of years ago. I think it was 2018, 2019, right around that time. And we were all there for it. And after he passed, we're all trying to figure out, the family was trying to figure out things. And my uncle's an idiot. I'll just say that. I was going to say kind of an idiot, but no.
He's a legitimate idiot.
He is, yeah. He's not listening, but anyway, even if he was. Anyway, so we're trying to, the family's trying to figure things out. And luckily, one of the greatest gifts really my grandfather could have given us was he went to a planner and did an estate plan and had a binder. And when we opened up this binder, it said in much nicer, more pleasant words, but it said basically, if you're reading this, we're sorry about your loss, but your loved one cared enough to put a roadmap so that nothing is left unturned, and that you know what everything was, where everything was, and what the family needs to do. And here's the step-by-step process. So just, me reading it and my, me just reading it out to the family, everybody kind of understood what was going on, because people didn't know. They're all talking about probate and all this other stuff. I was like, no. It's all right here. So it was really a burden was lifted off of everybody. So nobody had to worry about that anymore. Everything else could now get focused on.
Right. You didn't have to guess. You didn't have to wonder. You didn't have to hunt. You didn't have to find. It was all packaged together in a nice logical order with a binder and easy to follow instructions, and a whole burden got released off of your shoulders and your family's shoulders at an already trying time in your lives. And so great human first-hand account example of the value of a good estate plan. So what is estate planning? Well, it refers to the process of basically arranging the ownership, management, and distribution of your assets somewhat during your lifetime, but mainly after your death through properly drafted legal documents to ensure that your wishes are carried out. So at a high level, that's essentially what estate planning is. And while Damien presents a very positive outlook on estate planning, typically there are objections to from people who resist going through the estate planning process. And one of the more common ones is, I don't need an estate plan because I don't have many assets. Now, we don't hear that from our clients too much. That doesn't apply to them. But that is a common one in society, that I don't need an estate plan because I don't have many assets. And that's not true. Estate planning isn't just about wealth. It's about ensuring your wishes are followed, both financial wishes and how your assets transfer, but even if you have a small estate or no estate from a financial perspective. Part of an estate planning process, which I'll get into later, is your health care wishes and what you would like done if you find yourself incapacitated or, in the traditional sense, in a coma. How would you like decisions to be made for you? That is a component of an estate plan during your lifetime. Here's another one. I'm too young for an estate plan. Well, right, because you got a long life ahead of you and you don't have to worry about it today. Well, obviously, we are all susceptible to getting hit by the proverbial bus, I like to say. Despite our best plans and intention, real-world events can get in the way, and every day, practically, when I read the paper online, so it's not really the paper, I guess it's the electronic version, but there's some form of accident, right? An auto accident that's happening almost anywhere in Hampton Roads where someone is losing their life. And so that's a real possibility for all of us. So it's never really too early to start planning your estate once you're legally and adult. So in Virginia, 21, I believe. And then, of course, if you have any life changes, even while you're relatively young, you get married, you have children, you get divorced, all of those and more life events trigger the need for estate planning. And then the last one, and probably the one we hear most often is, well, the kids will work it out when I'm gone. I don't really want to mess with that. There's plenty of money for them. They'll figure it out. Just because you have a lot of money, however you define that, doesn't mean it's all going to be okay in the transfer of that money when you die. In fact, the more money typically leads to more problems if there aren't good instructions on how that money gets passed.
I was just thinking when you said that those people must be way overconfident with the friendliness of their family member, their sibling, the sibling love between them two just to get along, because sometimes you see the nastiest side of people when money's involved and death is involved and inheritance and people feeling entitled.
Without a doubt. If there's already strained relationships within the family, passing money through inheritance without a good plan is only going to fray those relationships even further. It's going to magnify whatever problems already exist. And even in families where, say, all the siblings do have good relationships, if the money is big enough, and somebody in the family, one of those siblings, feels slighted that they aren't getting their fair share, that can create a rift where one did not exist prior. So the kids will work it out when I'm gone. That is not a good excuse. I think generally people who kind of use that as an excuse, they have a general fear of death. They are avoiding the topic of death. And some people actually think that planning for death will somehow cause it. I've heard that one before. So I understand where people come from. Obviously, it's not a pleasant topic. No one likes to talk about it. I don't like to talk about my own demise, but it's a reality. No one gets out of here alive. So let's go through our life responsibly, or let's go through the death process responsibly, like we go through our life financially responsibly as well. All right, got to pause right here, take a short break. If you want to jump in on the conversation, talk about estate planning, or anything having to do with your own personal financial situation, give me a call on the studio line, 627-7979. I'm certified financial planner Kevin Zivna. You're listening to Dollars and Common Sense on News Talk 790 WNIS.
Wealthway Financial Advisors, planning for life. Wealthway Financial Advisors, planning for life.
And welcome back to Dollars and Common Sense, your local source for objective, unbiased financial advice. I'm certified financial planner Kevin Zivna, the president of Wealthway Financial Advisors, the premier financial planning firm in Hampton Roads, where we integrate expert investment management with customized ongoing financial planning advice to help our clients answer life's big financial questions and enhance their quality of life. For more information about us, look us up online at wealthwayadvisors.com. All right, tonight we're talking about estate planning and some of the key components of a good estate plan, a thorough estate plan, are, well, the obvious, wills and trusts. We always throw that out there at the intro of every show. That's always on the table to discuss. Wills and trusts, that's a big part of the estate plan. Most people are aware of those components. There's also, though, power of attorney and healthcare directives. So financial power of attorney and medical power of attorney and advanced medical directives. There's also beneficiary designations, which beneficiary designations are sort of sit alongside estate planning documents. They're usually put onto bank accounts, brokerage accounts, your company retirement plan, whether that's a 401k, 403b, TSP, what have you. Those have beneficiary designations. And then there's tax considerations to keep in mind when it comes to the financial ramifications of the estate planning process. Some states have an estate tax and or an inheritance tax. Virginia has neither, so it's not too big of a deal here. So I'm not going to spend too much time on that. And then the guardianship of minor children is a component of an estate plan as well. So if you're a family that has minor children, then what would happen to them if the parents met an early demise? Who would the children live with? Who would raise them? And how would their care be paid for? Making those arrangements in advance is a part of a comprehensive estate plan and is critical to ensuring the successful transition and successful raising of them in that very sad and tumultuous event. All right, got to take a short break for the news. Going to be right back after that, talking more about estate plan and estate planning tools. I'm certified financial planner Kevin Zivna. You're listening to Dollars and Common Sense on News Talk 790 WNIS.
Wealthway Financial Advisors, planning for life. Wealthway Financial Advisors, planning for life.
And welcome back to Dollars and Common Sense, your local source for objective, unbiased financial advice. I'm certified financial planner Kevin Zivna, the president of Wealthway Financial Advisors, the premier financial planning firm in Hampton Roads, where we integrate expert investment management with customized ongoing financial planning advice to help our clients answer life's big financial questions and enhance their quality of life. For more information about us, you can look us up online at wealthwayadvisors.com. Once there, you can request an information packet to find out what it's like to work with us, or sign up for a free quarterly newsletter at wealthwayadvisors.com. Just go to the Request a Consultation page, put your name and address in the dialog boxes there, select the appropriate drop-down menu, and we'll get that information out to you later on this week. And that's all we will use your name and address for, is just to send you the information that you request. Or if you have some detailed questions, want to speak to a live human being, give us a call at the office, 456-2200. Want to remind everybody, our next show will be in 2 weeks on Tuesday, July 23rd at 6 p.m. as usual. But if you can't catch us live every second and fourth Tuesday of the month, get this show as a podcast. Search for Dollars and Common Sense wherever you get your podcasts. Download us, take us with you where you go, and listen at your convenience. And for those of you into social media, we have a presence on Facebook and LinkedIn. Search for Wealthway Financial Advisors. Hit that like or follow button, and then about once a week, we put up a informative and interesting financial planning post to keep you engaged in the process. All right, tonight we're talking about estate planning, and if you want to jump in on that conversation, or you have any questions, comments relating to your own personal financial situation, give us a call on the studio line, 627-7979. Estate planning tips, tools, and techniques. Went through the definition of estate planning, the importance of estate planning, some of the common objections that people raise to getting an estate plan done. Now let's talk about some of the key components. That wills and trusts are the biggies. That's pretty much everybody knows those conceptual documents. A will is a legal document specifying how your assets should be distributed after your death. It's kind of like an instruction or procedure manual. And in every will is an executor. The executor is kind of like the rule follower through the probate process. And the probate process is the legal process through which assets are transferred from the decedent to the heirs, loved ones, friends, family, charities that the decedent wishes to have happen. Now, most people think that all they need with an estate plan is just a will, and that a will takes care of everything. And no, that is not true at all. In fact, in many well-done estate plans, a will is probably the smallest component of the estate plan. I mentioned beneficiary designations earlier in the show. Beneficiary designations are targeted instructions that you place on typically individual accounts. So your bank account, your brokerage account, your IRA, your Roth IRA, your 401k, your 403b, your TSP, your life insurance proceeds, your life insurance policy. These are targeted specific instructions that go on these types of accounts that supersede anything in the will. So if you have most of your liquid assets in these types of accounts, which most people do, and you put beneficiary designations on them, which is the fastest, easiest, cheapest way to transfer assets at death, then there isn't much left over for the will. Maybe it's the house and personal property, some cars, some jewelry, personal effects, furniture, heirlooms, that type of thing. But most of the value of the estate can be transferred via beneficiary designation if you set it up properly on accounts. And it's free. It doesn't cost anything to put a beneficiary designation on the account. So, for example, the typical arrangement is husband puts wife on his accounts, wife put husband as beneficiary on her accounts as primary beneficiary, and then contingent to those are usually the kids. And if you have one kid, they get 100%. If two kids, 50%, and three kids, 33%, and so on and so forth. That's kind of the typical arrangement that we see set up as beneficiary designations. And what happens when the account owner passes, then those beneficiaries, all they have to do is show up to the bank or the custodian or the brokerage account, or if you work with a financial advisor, us, with a formal, legal, original death certificate and an ID. And while there's some paperwork to fill out, the assets in the account of the account from the owner who died usually can be transferred to that beneficiary in a matter of weeks, free of charge. So beneficiary designations do a lot of the heavy lifting of estate planning if you set them up properly and you keep them up to date. So, while will is important, it's not as important to the estate plan as most people think. What about trust? A lot of people think that they need a trust at some point, or they at least come to us asking if they need a trust. I think there's some mythology around what a trust is and what a trust can do. A lot of mystery around it. Like rich people, really rich people have trusts, and they hide their assets and they don't pay taxes on them, and the kids live off the trust and they never have to work their entire lives. Well, most of that is not true. Trusts aren't some magical instrument that allow you to avoid taxation. No. And yes, you can make your kids' trust beneficiaries of trust and dole money out through trust to them over their lifetime, but that has its own drawbacks as well. But specifically, a trust usually come in a couple forms: a living trust or a testamentary trust. So a living trust is something you set up during your lifetime, and you can set up your own trust and make yourself the trustee of your own trust, which means you have total control of the assets in the trust. And when you pass, then the trust becomes typically, first, while you're alive, it's a revocable trust. So you can change your mind about anything in the trust. You can cancel the trust if you want. Total control of your financial situation, but the assets are protected in the trust for creditor protection, and has some other benefits in terms of administration. But a trust while you're alive or a testamentary trust is usually something that's embedded into a will, so that when you die, the will then has instructions to create a trust at that point in time. It's also, in addition to be called a testamentary trust, it's called a springing trust sometimes. And that then puts more restriction. The new springing trust, puts more restriction around the assets after you pass. Then there's revocable versus irrevocable trust. A revocable trust, again, is something you would set up typically in your lifetime, complete control over it, can revoke the trust and its instructions at any time you want, or an irrevocable trust. Those tend to be much more specific, have very specific uses. Once set up, the language in them is frozen or very difficult to break. And the rules are sort of set in an irrevocable trust. And a lot of times, a revocable trust during life will be converted to an irrevocable trust after death. Pros and cons to each way of doing things, just raising the concept here. Then one of the benefits of having a trust is that they avoid the assets in the trust avoid the probate process. The probate process is very expensive, it's time-consuming, and it's public. So a trust avoids probate, which makes it cheaper, faster, and private. So those are some good benefits. But trusts come with their own drawbacks as well. There's a lot more complexity around arranging your financial affairs in a trust, and you have to kind of be up to the task. So estate planning attorneys love to draft trusts. It showcases their ability, their creativity, and they get to charge more for it, and that's okay as long as you're getting more for it. There's nothing inherently wrong with that. But we do find that some estate planning attorneys tend to be a little bit more trust happy than others. Just be aware, though, that to you, the owner of the trust or the trustee of the trust, that's going to come with more work on your part if you want the trust to be effective. And essentially what that means is how you put assets in a trust is you retitle them in the name of the trust. The trust becomes the owner of your house. The trust becomes the owner of your vehicles. The trust becomes the owner of your valuable personal property. The trust becomes the owner of your bank account and your brokerage accounts, not your IRAs or 401ks. That's a different legal matter. But the trust becomes the owner of all those assets, and especially like your bank account. And so you're actually writing checks out of your trust account instead of your personal account. And that's the way it should be if you want the language in the trust to be effective, so that if or when you pass away, the whole purpose of having the trust is a advanced written set of instructions that can be easily followed by your successor trustees. But you've got to fund the trust. And if that's probably one of the biggest mistakes that we see people make is they come to us, they already have a trust drafted by an attorney somewhere, and we ask them, okay, why did you do it? Why did you set up a trust? And how have you funded the trust? And usually the first thing is that, I don't know why we did it. The attorney recommended it. Okay, all right, let's work through this. And then what do you have in the trust? What assets do you have? Well, we put the house in there, but then that's it. We don't have anything else. Well, why didn't you put anything else in there? It was too hard. I got lazy and I forgot about it. You have to follow through on the mechanics of a trust and get your most valuable assets retitled, owned by the trust in order for the trust to have any value. If the assets are owned in your own name personally, then the trust has no effect on those assets and is of little value in the estate planning process. All right, that's all I'm going to say about wills and trusts right now. We're going to move on after the break to some more estate planning tools when we come back. You're listening to Dollars and Common Sense on News Talk 790 WNIS. to Dollars and Common Sense, your local source for objective, unbiased financial advice. I'm certified financial planner Kevin Zivna, president of Wealthway Financial Advisors, the premier financial planning firm in Hampton Roads, where we integrate expert investment management with customized ongoing financial planning advice to help our clients answer life's big financial questions and enhance their quality of life. For more information about us, look us up online at wealthwayadvisors.com. Once there, you can request an information packet to find out what it's like to work with us, or sign up for a free quarterly newsletter. Or if you got nuanced questions, want to speak to a live human being, go ahead and give us a call at the office, 456-2200. Next live show will be in 2 weeks on Tuesday, July 23rd at 6 p.m. as usual. But if you can't catch us live every second and fourth Tuesday, get the show as a podcast. Download Dollars and Common Sense wherever you get your podcasts. Search for Dollars and Common Sense. And if you're into social media, we have presence on Facebook and LinkedIn. Search for Wealthway Financial Advisors. Okay, talking about estate planning tonight. Tips, tools, and techniques. We're going to go through some more of the tools that are used in the financial planning in the estate planning process to ensure that you have a full, robust, and orderly plan and orderly transfer of assets with the main objective of using your money to its fullest potential. We do a lot of good in the financial advisory world, but one thing we have not figured out is how you are able to take your money with you after you go. So this is the next best thing, is you deciding where your money, how your money gets distributed when you go. And there are ways that you can even control some of that money after you go. If I have a few minutes left over, I'll talk about those. So we talked about wills and trusts, main components of an estate plan. There's also power of attorney and healthcare directives, and these are some areas that most people don't think about. So, a durable financial power of attorney. You appoint someone to handle financial matters if you become incapacitated. So this is an area where estate planning actually is involved while you are alive. So if you become incapacitated, you are in an auto accident, you have some medical event that renders you unable to be alert, make cognitive decisions on your own behalf, then a financial power of attorney can step in and pay your bills, write checks out of the checking account, make decisions for you on your behalf regarding financial matters. So having a power of attorney is a good tool to have as part of a living estate planning process. Also, a medical power of attorney, or somebody who can make medical decisions on your behalf if you can't make them for yourself. Now, most people think that their spouse can do this for them. We're hearing that it's becoming harder and harder for a spouse to make decisions for their incapacitated spouse without them being officially designated as a medical power of attorney. So just be mindful of that just because you're somebody's spouse doesn't mean you can automatically make all the medical decisions for them. It's probably going to be hospital and physician dependent on whether they will accept those instructions. So always good to have a medical power of attorney in place as part of a living estate plan as well. And then there are healthcare directives. So this is sometimes called a living will. It specifies medical treatment preferences in advance if you are not able to speak and verbalize or articulate what you want done to you while you are in a hospital. And this is something that takes a huge burden off of your spouse and other family members, because in the event you become incapacitated or on life support in some fashion, the family is left to try to figure out what you would want. And that's a very heavy burden to bear, for them to bear on your behalf. So writing down your wishes and instructions in advance, and this should be part of a estate planning package that any competent estate planning attorney can do for you. Having those written out in advance is what frees your family from the additional burden of having to make decisions on what you would want. And I can report from some of my doctor friends that no matter what you may write in your advanced medical directives, if the decision is left to the family in some form, shape, or form, they almost always err on the side of prolonging life, no matter how low of quality life that may be. And I've heard multiple stories of 93-year-old grandma on the operating table who's already frail and infirmed, and family members insisting that doctors perform CPR on her to try to prolong her life, and they can hear the ribs cracking and breaking while they're trying to do it. If grandma wants to go, grandma's decision should be honored. So the healthcare directive is an important document. Okay, beneficiary designations. I kind of already talked about those extensively. Tax considerations, estate tax versus inheritance tax. In Virginia, there is no estate. So when you die, all your assets get added up and tallied, and if they're large enough, then some states impose an estate tax. And there is a federal estate tax, but it's right now it's very high, or your assets have to be very high before the estate tax kicks in, over $13 million, so it doesn't apply to too many people. Virginia does not have an estate tax. Then there's an inheritance tax. So when the inheritors receive the money, what they receive, the amount that they receive, can be subject to tax. It is not in Virginia. So thank you very much, Virginia, for no inheritance or estate taxes. But that's not true in every state. I recommend that you don't die in New Jersey, because that's very expensive to your estate and also to your inheritors. All right, Damien's giving me the high sign. I got to run out of here for today. We're going to be back in 2 weeks on Tuesday, July 23rd at 6 p.m. Until then, I'm certified financial planner Kevin Zivna. You've been listening to Dollars and Common Sense on News Talk 790 WNIS. The preceding program was sponsored and paid for by Wealthway Financial Advisors. We are solely responsible for its content.